Hard to believe it's already July. It has been a very interesting year so far when it comes to talking about your money. Where do we go from here? There are a lot of questions. The man with the answer, Heritage Capital's Paul Schatz, back with us today. Nice to see you.
Good to see you, my friend.
Okay, so let's get right into this. For the most part, I think we should be happy at this point after the first 6 months.
If you went to bed on December 31st and you woke up 2 days ago, every investor who has any stock portfolio should be happy because it was a really good first half of the year.
Mhm.
In the interim, you had to withstand that 10% decline based on crazy reactions from geopolitics.
Right.
So two things are important, Matt. I say this every time someone injects geopolitics. I know of no successful investor in the history of investing who's ever used geopolitics to model investing. You're
Wow.
always chasing your tail. It does not work.
Mhm.
We take a very non-emotional view. And in simple form, this is what, and you and I talk about this. We gather data, we model data, we analyze data, and we execute on data. That's it. Anytime someone says, but, oil, but, the White House, but, Congress, the election, Iran, the Middle East, Australia, it doesn't matter. If it doesn't fit into a model, it's irrelevant for more than a day or a week or 10 days or so.
So, okay, then the fundamentals seem to be pretty sound by what you're saying. Is that the way it's going to stay?
So here's what's interesting. This continues to be a very hated and disavowed economy. The data continue to outperform and exceed expectations. So that's perpetuating this bull market on and on and on and on. And I would subscribe, you can't end the bull market when people feel crummy, when people feel scared, when people feel there's a misery index that has to do with where inflation is. And I said this in 2023. The worst inflation of the generation ended in 2023. If this was an earthquake, this is a small aftershock, fully not minimizing what it costs to fill your grocery cart at the store.
Which is what people are most concerned with because the price of gas is still high. The price of just about everything seems high. So let's take it back to what you said at the start of this. Up until 2 days ago, if you woke up, you were feeling pretty good. How should we be sleeping for the next 6 months?
I'm glad you gave me 6 months and not 6 days or 6 weeks. So I'd say this. When I was on with you in January, I said market would have a mid-single digit pullback in Q1. It went 10%, so it went more than I thought. We'd rally to new highs by July 4th, and then the opportunity for a 10% correction, followed by more new highs after that. We had that new high, we had that pullback. So right now, the door does open up to a Q3 correction, somewhere between 5 and 11%, let's say. But this is one where you should buy with both hands. So if we get down 10%, that'll be the gift of Q3. I just wrote in my blog this morning, I'm still trying to run our own models, grab some data from this morning to figure out, do I think it's 5% or 12%? But I do think we'll have some weakness this quarter, followed by a run to new highs into January. People are going to say it's the midterms. The Republicans are going to lose the House, which they probably will. The markets won't care. Gridlock, where you have split power, is received very well in the market. So if I were sitting at home with my 401k, I would absolutely rebalance it because this quarter, Q2, stocks soared. Bonds did not. I would rebalance that to whatever your allocation is, and I would definitely add things besides just stocks and bonds.
Okay, so what Paul Schatz is saying, you heard it here, is do not take all your money out of the bank and put it in a can underneath your bed and try to sleep better because of it. Paul Schatz, always good to see you.
All right, Matt, thanks so much.